Cryptocurrencies had a bad week. Let's talk about how a guy named Do Kwon f***ed the entire crypto market. We're gonna go super fast this week. A gentleman by the name of Do Kwon, who was the founder of what was supposed to be a stable coin by the name of TerraUSD and another coin called Luna, was, well, an arrogant piece of shit who referred to people who were his critics as the poor. He didn't debate with the poor, and he loved watching failing entrepreneurs because it was, quote, entertaining. This guy was not exactly in your top 10 list of nice people. He was kind of a piece of shit. His stablecoin, which wasn't actually pegged to the US dollar, but was supposed to be pegged to the US dollar, most stablecoins are actually linked to something and backed by currency. Well, this one was backed by an algorithm, and guess what? That great idea, that didn't work out so well, and TerraUSD went to really quickly. Now, wild swings are fairly common with cryptocurrencies, but even seasoned investors were screwed as Bitcoin dropped 29%, in part because of how unbelievably bad TerraUSD was for the market over a 7-day losing streak that just ended. This, as the stablecoin USD was part of the crypto world that touted its stability, is pegged to the US dollar. You can't lose money. This thing is amazing. Totally crashed. Went from a lot of money to effectively no money. This begs the question, are stablecoins really stable? And can we really go longer without regulation? Some of you are going to get pissed off by that. Some of you aren't. I don't know, but I'll tell you, regulation is coming. In November, Bitcoin and Ethereum, two of the most popular cryptocurrencies, reached all-time highs. I know, because I sold some around then. Bitcoin's value at 5 p.m. November 9th, $67,802.30. Ethereum was worth $4,800. I was a happy camper then. They are now down 58% and 60% respectively as of the date of this video. So cryptocurrencies were falling even before last week, and people could argue inflation has scared out a lot of institutional investors from the market, and there's lots of other pressures out there. But TerraUSD was a big problem for the market. But wait, Coinbase came in and kicked everybody in the ding-ding right towards the end to really scare the market. Bitcoin and other digital currencies have been talked about as inflation hedges. Well, the ripple effects played out a little differently. And this has a lot to do with surging inflation spurring faster than the Federal Reserve had even wanted. And they thought, okay, we'll raise some rates and inflation will stop. Well, it didn't stop. And these institutional investors that are in cryptocurrency, they thought, well, we should probably really get out of this highly volatile product because these prices are all over the place, man. And they pulled out. Well, that also helps values drop to the floor. Unloading these risky assets for more non-risky assets, whatever the hell that may be, that caused a huge problem. Exasperating the losses in cryptocurrency trading was originally, it was a retail investor game. People like you, people like everybody else out there. And then sometime around Q3 2020, Q4, and then ultimately Q1 2021, institutional investors became the majority of the people holding cryptocurrency. They were buying so much cryptocurrencies because guess what? They wanted in on the same things that everybody else was retail investor wanted in. They wanted that upside potential. But now it's considered risky. And this thing that was supposed to be a super hedge against inflation, it's not really hedging inflation because everybody's jumping out of it saying, this isn't stable. I don't want to be in this. I want to be in something safe. Then Coinbase comes along, and then the market gets really fucking weird. As the price moved lower, both individual and institutional investors alike have been bowing out. And when Coinbase reported its first quarter results as of the Tuesday of 2 weeks ago, probably by the time you see this, it revealed that it was hemorrhaging. I mean, badly. They were losing users left and right, and people couldn't figure out why. By the end of trading on Thursday, Coinbase's stock was down 82% below from where it traded after its first day of trading over a year ago because they just had their IPO. 82% down from their IPO price. That's a fucking problem. Coinbase's stock down from an all-time high of $368.90 last November when Bitcoin's price was also peaking at that $67,000 value. So that's been a huge drop-off. The part that blew my mind, and I had to look it up for myself, was the issue that some investors were shocked to find out that language in Coinbase filings, their public filings, their 10-Qs, suggested that an account holder could end up, quote, as an unsecured creditor in the event of a bankruptcy. And for those of you who are asking what's an unsecured creditor, it's not a good position to be in, and here's a technical legal definition. An unsecured creditor is a creditor without a valid lien or mortgage against property or the person filing. Essentially, they can use your cryptocurrency in the event of their bankruptcy to pay everybody else off who's a secured creditor, even with somebody with a UCC1 filing. If you don't know what that is, trust me, it's higher than you being an unsecured creditor. They get paid first, and you get whatever's left. And the problem is, the users, you, me, everybody else, there's probably not left for us. So cryptocurrency in Coinbase, not exactly super safe, especially when their value is dropping 82%. That's crazy. I'm sure it was in their user agreement, but who the really reads a user agreement anyway? So nobody saw it. They finally picked it up here. I read it, but just because you think I'm crazy, I'm going to quote you from the 10K exactly what it says so you think, wow, this is up. Because, this is a quote here, custodial held crypto assets may be considered to be property of a bankruptcy estate. In the event of bankruptcy, the crypto assets we hold, Coinbase, in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as generally unsecured creditors, the company said in their filing. That is a quote. By contrast, if you were to hold stock in like the stock market, securities held for customers by a registered broker are legally segregated from assets of the brokerage, meaning they can't be touched in a bankruptcy proceeding. And effectively, the Securities Investor Protection Corp, a nonprofit entity set up by Congress in the 1970s, well, guess what? They insure you up to $500,000 per account. So why the wouldn't you be in securities? Because cryptocurrency is not secured. And guess what? If that holder of your securities goes out of business, Coinbase is gone, you can lose everything. Well, Warren Buffett, Charlie Munger. This is my final point. I promise I'm going to shut up now. They warned us. They warned us and they warned us and they warned us, and they said they didn't understand why in the hell anybody would ever do this. This was a huge undermining of the US dollar. The greatest investors, the greatest living investors of our time, who are now billionaires, who warned everybody against cryptocurrency, said, hey, this is probably a bad idea. Not once, but twice during their annual shareholder meetings. And the whole world said, f it, they're old. They don't know what they're talking about. Maybe we should have listened. I don't know what happens for cryptocurrency. I know the regulation is coming. I know the values are slumping really low. And I know that Warren Buffett and Charlie Munger called this. What do you think? We'll see you next week.